welcome to the closing beat, everybody. Happy Friday. How you doing out there? Hope you're having a good day. Thank you for working with us on everything here as we adjust. This is a quick show that we do called the closing beat. We go over the stock markets, all the good, the bad, and the ugly that happened for the day. And of course, today will be no different. We're going to cover that as well. We're also doing a research site. Hope you'll check it out. We're calling it Research by Jazz. And basically, we're covering a lot of the stuff that we share here. I'm actually going to spend some time on something really unique today and try to expand to highlight some of the things that we are going to be offering in here. You can go to jazzwealth.com/research if you want to learn more about what to be expected in there. Again, the goal is we're trying to hire a developer full-time, so we're trying to offer you something that you feel is a good value, that you kind of get more data and research from us. So we can kind of improve and keep going. You can leave your email down here at the bottom if you'd like. We'll email you one time just to let you know that everything is ready and when it is ready. And then, of course, that'll be it. We won't save your email or anything like that. So hope you'll check it out over the weekend if you're interested. And stick around. I'm going to go through everything fairly quickly. Then I'm going to go into research and I'm going to share something with you so you have something to learn. But I'm also going to go into kind of everything that you could expect, right? So let's talk about the stock markets here today because you don't really have a lot going on. We could pretty much focus on this. You got a small down day in the Dow and the S&P. The NASDAQ was able to finish out the day positive. In fact, the NASDAQ was the strongest area of the market today. We'll cover that in a second, but you've got biotech really accounts for all the gains in the NASDAQ today. Small gains, right? The 0.13% gain on the day, but that accounts for all of the gains. The Dow was the weakest, of course. Boeing and Apple are the biggest drags, representing about half of the day's losses on the Dow. Just a little bit under half the day's losses for the Dow. Basically started off the day with some what I thought was good news. China's getting a little cozy up to us there. They're saying that they're ready to purchase agricultural products again, live up to their phase one part of the trade deal. Trump said, if you don't, I'm going to raise the tariffs. China said, don't worry, we're going to do it. And then Trump said, well, we agree that they are fulfilling phase one of the trade deal there. So that was exciting, but it very quickly started to see the markets fade away because the virus is making its way back into the headlines. It's starting to creep its way back in there. And all day the focus built and built and built. Kind of started yesterday and the day before, but it really built into, oh my gosh, here comes the virus again. Apple actually decided that they were going to close stores in Texas and Florida in the middle of the day. If you look at the stock market at 12 o'clock, right on the dot, there was a boop, quick little plop down in the market. That would be the Apple news coming out throughout the day. It was also Triple Witching Day. Actually, just quarterly execution. Triple Witching Day makes it seem like something you should probably look up and have interest in. But basically, Triple Witching is something that happens every quarter. It's an expiration on stock options, which expire third Friday of every month anyways. The index options and the futures expire as well. So triple options expiration really doesn't mean anything for the overall market other than it tends to create a little bit of chop in a narrow range and a little extra volume there. So that's what you have there. Before we get on to the updates here, let me share something with you. You've got a little bit of exposure or a little bit of a change that I want to point out. So here is the Russell 2000 in purple and the S&P 500 in orange. Now, over the long run, over the last 5 years, as you can see, the S&P has easily outperformed the Russell 2000. It's been something that you just wouldn't focus on normally. But if we look in the short term here, we're starting to see a little bit of a change. In fact, if I go over to the last 3 months since about the lows of the virus there, next week will be the 3-month anniversary of that. But if I go looking at that here, all of a sudden we've got a little change where the Russell 2000 is starting to outperform the S&P 500. One other thing I'll point out is that the S&P 500 is also starting to lag behind the international index as well, which is where normally, for the last 5 years, it's definitely outpaced it. So the Russell 2000 is starting to wake up and attract people towards that as an opportunity. I'm not telling you what to do there, but it's something that you notice that little change. You got to pick up on that and say, maybe that's something I'm going to watch. I don't know if I'm going to do anything with it, but it's certainly something that I'm going to watch there. All right, let's take a look here. Well, actually, before I go on, you've got our FinTips videos this week. A lot of good ones out there. We had how to improve your dividend fund, dividend investing. If you're going to do that, I'll probably expand on that a little bit. Wednesday, we talk about avoiding international funds, maybe, right? Taking a look at the performance on average and things like that. Today, we talk about a new 401k rollover strategy for those of you that are unemployed, found that you lost your job. Hope you'll check that out if you're interested in that. Our wine and wealth class last night was a good one. It was a geeky one, but we went over bull market pullbacks in the early stages of a bull market, which is what we're in right now, to see if things were looking normal. Should we have a warning sign flashing, yellow flag? Or should we be really nervous that this could be a potential top? And also, one of the questions asked in Wine and Wealth last night about how to determine a top, you see what happened today? I mean, it was like perfect what we explained last night. So love that sort of thing. If you're one of our customers, that's available to you, of course, every Thursday. And the class replays are always there for you when you like to do a little binge watching over the weekend, if that happens to be the case. All right, let's go over to our sector breakdown here. Let's take a look and see what's going on out there. All right, real quick here. Almost every sector red on the day. You had industrials down on the day as well, pulling back below the 20-day moving average there. It was flat on the week, but today it was mostly weak due to the transports inside of that. That's going to be your airline stocks. They pulled back a little bit today. The virus issues, people concerned that that's going to hurt the economy, hurt these stocks. The airlines continue to pull back like United, Delta, and American Airlines. United got some of the worst of it there with 6%, Delta second place at 4%, and American in third place with 2% on the day. If you look at energy, energy was the leader again. It was the leader this week at moments, but basically up about 1% on the week. Sold off a little bit today. Really one stock that sticks out, you're probably seeing the news, Marathon Petroleum, although it finished negative on the day, was at one point the biggest gainer. It was also the biggest contributor to energy, leading the way at one point today. And so that's something maybe interesting there. The Speedway, the thing about them selling Speedway, they've been working on that for a while. So hopefully that deal can go through. I know they really want to. Chevron pulling back also weighed on the energy sector throughout the day. And Occidental Petroleum at one point was one of the better performers today. Did close positive on the day, but still down overall. Here you go. You got tech. XLK will use it. Did start the day higher there. It was the biggest gainer on the week. It gained 3% on the week and the biggest gainer by far. Year to date up 12%. Semiconductors were the biggest contributors today. We're going to talk about NVIDIA here in just a moment with you. But semiconductors were helping out things today with NVIDIA. You got Micron in the mix as well. It's still finished up just over 0.5%. Wells Fargo went to $65 from $55. So they were down here, price target. They raised it to $65 at Wells Fargo. Maybe something interesting to look at there. You got healthcare today still battling with that 50% area. This is a great lesson. We talked about this all week, where this would be a known area of a little bit, not necessarily trouble, but a bit of a pause there. Today it fought it off rather strongly. The XLV, or healthcare, was the biggest gainer on the day, just working its way through there. I think that's totally normal. A little bit of a pause there, no problem. Financials faded away all day. Did bounce a little bit off at the end of the day there, but just kind of weak on the day and dragging across the board. If you look at regional banks, there was no exception to that rule. Regional banks down 1% on the day as well. I do want to point out real quick, retail, I thought, held its own right till the end of the day there. It was a scattered group. If you look at retail as a whole, look at every single stock inside of it, it was pretty much scattered for stocks that were positive versus negative. Nope, I wanted to type Etsy. Etsy was the one that stands out here, gaining 10% on the day. It was the biggest contributor as well. It hit the highs there. Really, really strong. Wayfair, I don't often mention Wayfair, but this little guy just tearing away there. Very strong on the day. Also strong on the week, up 10% just this week, just over 10% as well. I mentioned in the NASDAQ that you had biotech leading the way. Here's the biotech ETF, IBB, if you want to take a look at just that area. I don't like to look at this area, but no doubt it was stronger today, up 3.2% on the day. That's going to be virus related. There's some news in there relating to companies and their vaccines and what they're working on with each other to try to help us out here. All right, you got gold. Nice move on gold today, $21 higher. That's going to be $17.53 is where it closed out on the day. We've been talking about this move, this push up into this area, the tightening pattern. Every day I've mentioned it for you. They're starting to wake up just a little bit if you're taking a look at gold. You got crude oil a little bit higher on the day, up 2.5% to $39.74. Kind of chopping around here, unsure of itself, I would say. A little bit of a pullback off highs, but not anything to get you excited, and a little bit of a rally off those recent lows, but also not enough to get you excited. So I thought that was kind of interesting. Doesn't really move the needle a whole lot. And basically, that's what you have for your overall sectors. So that's what you got there. We'll go over to the technical breakdown because I want to get to our lesson here today. You got 17 new highs on the day. Only 4 of them finished in the green. If you're taking a look at some of these stocks, going to be familiar names: Adobe, powerhouse there ever since earnings. This is the earnings reversal gap that you had last week there. It's up another 1.8% higher on the day. Just momentum off of that earnings, very strong, and otherwise what would have been considerably a weak day if you're watching intraday for the stock market. Clorox moving higher as well. That's that sort of sloppy breakout we talked about last week, building momentum on that. Maybe a little extended in the short term. I don't know. Something maybe to pay attention to there. But otherwise, Clorox not looking too bad. There were no 52-week lows, so we'll move on to some of the stocks that we had on a watch list there. You got ConAgra, very sloppy attempt at breaking highs. I think this is when you wait to break highs if you're interested in it or like this sort of stock pick here. But down 2% on the day. Remember, when it pulls back, it's a little bit volatile. If it falls for a few days, that doesn't mean it comes off the watch list, in my opinion. Just a little bit volatile. And then you guys and your whole logic, you got excited. There's the breakout. We've been talking about it for the last 2 days. It was hinting. I gave you the stats on Wednesday to explain how it was stronger overall. Fundamentals were strong overall. Technically, it was stronger. Today, everybody got excited. Well above average volume there as that breaks to highs. That's impressive, I think, because it happened on a otherwise fairly weak day. The markets after hours are selling off even more aggressively here since the close. So I don't know. I thought that was impressive. Anyways, that's that. A couple stocks in the news here, and then we'll take a look at some of the other stuff. AMC Theaters is going to be opening their theaters July 15th. You're going to have to wear a mask if you want to go. DraftKings, they saw you guys were interested. They're raising their, DraftKings is raising the common stock. They're issuing more shares. They're going to go to $40 a share there. Thought that was kind of interesting. You got to read. This is weird. This is a little bit weird here. Ventas, however you want to say it. Stock was lower today by 9%. Just got beaten to death. They lowered their dividend. They brought their dividend down 40% to 45 cents a share on a REIT. That's a tough one. Remember, REITs have to pay out at least 90% of their earnings, right? So a dividend is not necessarily a bonus for them. They are required to pay out their earnings in the form of dividends to hold on to their REIT status. And so the fact that they drop the dividend means that earnings are going, revenue totally just is dropping there, and they're already getting ahead of that. So I thought that was interesting. Wingstop broke out to new highs here. If you look at Wingstop, what did it gain today? 9.2% higher on the day. Earnings, right? You got earnings in this one. They did well. One thing I'll add to it, you always want to do a little bit more research, as I'm about to show you, but Wingstop, 80% of their earnings and their sales came from carryout, or they would just deliver it before the virus. Now that we're in this virus nightmare, it's 100% naturally. They've closed the dining rooms and everything. So they were already well prepared to deal with this. Probably one of the reasons you see the stock holding up there as nicely as it has. All right. One last thing here, and then I want to teach you something. I'm going to get out of the way and let you have a great rest of your day. I'm going to see if this will pop up. Should look just fine. Are you ready? Okay, you see this a lot this time of year. It's the halfway point throughout the year. You see a lot of people say, show me the best performing stocks over the last 5 years, 10 years, 15, 20 years to allow you to start building a watch list. It'd be very easy for me to say, here's the best performing stocks over the last 5 years, but that wouldn't give you anything. So I want to break down today how you can take best performers, worst performers, put them in your own categories and allow you to do some research, but I'm going to provide the research to you while we're doing it. Here we go. Top 25 best performing stocks over the last 5 years, and I said with a twist because we're going to add something to it today. All right, you've got the list. You can see the list there. If you're on a phone, it may be a little bit small. I'm sorry, there's a lot of data here. You might have to watch on a desktop. What we did is we got the stock. We've got the name, the sector, category. I determined this category. This is our research and what you could do if you're doing the same. I'll explain in a second. Total 5-year returns, looking pretty sweet here. Here's their sales growth. A lot of people are interested in that from a fundamental perspective. We then put the analyst average expectations there. We'll go over that. Yesterday's closing price, the price target for the analyst, and how far below or above it was from the target. Then we worked out some averages below. Let's go. The first category here you notice is the semiconductors. I intentionally just called them semiconductors. What you see here at the bottom is that they have the best overall 5-year return. So if you're building a watch list, you go, show me the best of the best. I see that's the top 25. This is a very diverse list. Show me the best of the best. Very quickly, you can see it's the semiconductors, right? If you look up here, the top two, well, I think the only ones with 1,000% gain, are AMD and NVIDIA. And then if you look down at the bottom, you got Broadcom. And where's the other one in there? Right there. There you go, Lam Research. So you see, these are already the better performing stocks just on average there. So something to kind of keep in mind there. Sales growth, not horribly impressive, but it is the second most popular area in terms of analyst expectations. Here's the problem with that. If you look at Broadcom, you've got 9% left to go. You look at AMD, it's already above its price targets. If you look at NVIDIA, you got a little bit more to go, but after, like today and stuff, it's kind of getting close there. And then I should have made these bigger. If you look at Lam Research there, same thing, right? So you got a little bit to go. I don't know that you're interested in buying these right now. It may be a watch list type thing for you to look at. But semiconductors, something to look at there. Right, you got decent gains with the 4 inside of it. Now, what's going on with these semiconductors? Well, stocks like NVIDIA have performed well because if you research the company, they have focused on their overall the cards, the graphic processors, right? So they focused on that and the execution of not only the quality, but the distribution of those graphic cards. And they've nailed it. Analysts are very, very positive about that. In fact, you could look over here and see the closer to 1 you are, the more the average is just a flat out outperform buy rating, right? So analysts positive on that one. It's kind of the darling of the semiconductors, I'll give you that. And so that's how they've done so well. Conversely, I just happen to know Broadcom, so I put it on there. The ticker symbol is AVCO. Avago is the company that owns this. They don't call themselves that anymore, but it used to be that there was a ticker symbol called BRCM, and that was its own separate company. Avago bought Broadcom. They bought CA Technologies. They bought others, and so their growth has come because of gobbling up competition. They've been more of an acquisition company, grow through acquiring rather than grow through organically, things like that. So very quickly, you're able to take 4 stocks, kind of look at them, bucket them into a category, and not let this large list kind of wear you down, right? You can then research the companies rather quickly and see if that's something you want to focus on. Another category, and second in line, we call Goliath, right? These are meant... they're just large, right? These are companies that didn't necessarily grow because they're small and sort of feisty and they've got rapid sales growth. But these are guys that really offer high margin products. Microsoft is my best example there, where, obviously the cloud-based program that they've been transitioning to and did quite well, those are high margin products. So they're doing well, not because they're adding millions and millions of customers, but because they're continuing to grow off the margins that they're able to increase over all these years, not necessarily by a lot. And so I call them Goliaths in their space. Amazon debated where this should go. We put it in the Goliath category, although you could dispute it if you like to. Amazon makes a lot of money, well over 30% profit margins on their AWS offering. And so, you got to put that in the Goliath category. At least I felt that way there. Now, if you look at their overall returns, not too bad there. They are the 3rd place as far as the sales growth overall, best analyst ratings out of the group in average terms there. So something to consider if you're looking through that. Again, Goliath is not, it's just a name I came up with. It was just a way to highlight, put these guys into some smaller buckets so I could research from there instead of looking up every single stock on its own. Island stocks. This one's kind of interesting. You're not going to recognize a lot of these names like Market Access in the mix, Transdigm. You may not have heard of some of these. These are stocks that they do well because there's really not a lot of competition. And the reason why there's not a lot of competition like Market Access, it's a bond trading platform, is because the regulatory hurdles that you have to go through, I know, trust me, to get into that space are very difficult, which makes it more likely that other companies aren't going to come and compete with them. So because of that, companies like Market Access have been able to raise their prices slowly, and they don't get much pushback because there's not much other offering there. It could also be not only regulatory issues that they got to go through, but other companies, they may control the information. And so by doing that, these companies are sort of on an island all on their own. You don't have to worry about somebody coming along and saying, oh my God, we're going to disrupt this space, at least for the moment, anything's possible. But so because of that, these companies, as you can see here, the island stocks, they've done well in terms of growth, individually, both as well as the average there, but they don't tend to do well with the analysts. They're the worst performing area in terms of analyst recommendations because there's nothing for them to grip onto and say, this is a great, awesome stock to buy. However, many analysts obviously missed the mark on those because they've done well. All right, health growth stocks. I just categorized these because I noticed a lot of these were in the medical device space. So I just said, well, these are health growth stocks because they've done really well. Dexcom, you may have noticed, it's a recent addition to the S&P 500. Very good performer overall there. And as you look here, you've got the... where is it? There it is. You've got a 5th place in terms of overall growth there. However, sales growth, very good. Very well. These are smaller. I mean, I don't want to say smaller. The market caps are still impressive. But these are more feisty companies that are building off of a more flexible base, smaller group of customers. They've been able to add customers a lot faster. And that's pretty cool there if you want to take a look at that. Again, the problem here, if you look through some of these, is the price targets. For example, Dexcom, right? Already above price targets. It's had an amazing run. It's not necessarily something you say, great, well, that's a leader, I'll buy that one. Maybe one you watch. These guys have good footing. They've got obviously things going well for them in their space. Maybe something you keep an eye on. And lastly, we've got something called, I didn't want to go through all of them for you. You could have some fun with it. But we got something called legacy stocks, or legacy margins in this case, right? So these are stocks that don't have very fast and rapid sales growth. In fact, they have the lowest, right? 11.7% overall sales growth, or average sales growth. You ask yourself, like, well, why am I investing in these companies here? Really, there's a couple different reasons. If you look at some of the names on the list there, these are more established companies overall. They may have, one of my favorites is the Cintas here. Cintas, I don't know how you say it. They have more exposure in a niche market. There's not a lot of competition. They dominate their niche kind of space there. And so they have more steady returns rather than rapid and strong returns. People like that. People like to participate in that. As long as there's nothing that can rock the boat, so to speak, then that's something that people find interesting. And maybe you will as well. So what I wanted to do was spend a few minutes on that sort of analysis. Things that maybe somebody else wouldn't point out to you. Yeah, it's a sales pitch. I hope if you can't be a customer here at Jazz, that maybe you'll consider our research platform. This is the type of stuff I want to expand on, and things that maybe we want to kind of help you learn along the way. Not necessarily to tell you what to buy, because I'm not allowed to do that, but to essentially help guide you into doing research. There's a million ways to analyze the market. If I can do it in a way or show you how to bucket everything and kind of come up with your own research quickly, then maybe that means it's something you'll want to participate in. Okay, next week we've got a lot of activity, so I hope you're going to be around. We're hoping to go live again. I don't know if it's going to work, but we're hoping to do it. So we'll be going through that. Also, we've got a lot of changes in the S&P 500. The NASDAQ 100, we'll be sure to cover that as well. And that's basically all I have for you. I'll let you guys do your thing. Have a great weekend. Happy Father's Day to all the dads out there. And I appreciate you watching. Maybe we'll see you next week. Enjoy.